Hello, my name is Yuya Shimizu, Chief Investment Officer of Hibiki Path Advisors. We are engagement-oriented investor investing to Japanese small to mid caps. The purpose of this presentation is to explain our shareholder proposal to a company called Japan Pure Chemical. We call it JPC from here. So we made a shareholder proposal to JPC in April this year. And recently, on 19th of May, the board has announced that they will disagree to our three proposals. Our proposal is basically based on how to think about the balance sheet. We will discuss firstly about cross-shareholdings, secondly about dividends, and third about disclosure of cost of capital. This, we believe, is basically one proposal asking the management to take advantage of their excessively strong balance sheet. JPC, about few seconds about JPC itself. It's a plating chemical company, very strong in gold plating and precision materials. Its cash flow has been very stable over the past years, although it has not been growing. The share price or the market valuation has kept declining because their capital has been increasing and their balance sheet management has not been catching up with that expansion of their balance sheet. Recently, its market cap is around 15 billion yen, and their net cash, including securities on the balance sheet, is about 13 billion. And their free cash flow, past 5 years, is about 900 million. So you can see it's a no-brainer. 2 billion enterprise value versus 900 million free cash flow. We believe it's very cheap, and we have been discussing with the management how to utilize this capital that they own on their balance sheet. We want strong support from other investors, shareholders of JPC, and we hope for your full understanding of why we're doing this. We're doing this to help JPC rise to the next level, become more sophisticated to think about their own balance sheet. So I will now go into the details of our three proposals. I will speak from the background so that you can focus on the slides. Thank you for your time, and please watch it until the end. Okay, here it goes. So this year, we made three shareholder proposals to the AGM of Japan Pure Chemical. One is about their cross-held shares, second is about their dividend policy, and third is about disclosure of their cost of capital. So about the first point, cross-held shares. You can see on this slide that their balance sheet is excessively capitalized with more than 80% shareholders' equity ratio. And the flip side, on the left side, asset side of the balance sheet, you can see that nearly half of the balance sheet is invested into other securities. This is the problem of cross-held shares. It is like the company is using our capital to invest into other companies, which is like they're acting like fund managers and it is like mutual fund. We believe this is not right. Sadly, company has come out with their opposition to a proposal mentioning that there's synergy in this cross-held shares. Well, maybe that is partly correct. We are fine to agree with that if they have a relevant explanation behind that thesis. However, in Japan, this cross-holdings started many decades ago, and it has been the case for many years, and people really didn't think about the owning of these shares. So we are just asking JPC to go to their counterpart and ask them that they want to sell, which will be the starting point of really thinking about business synergies between these cross-held share companies. This is pretty relevant in our view. And we want to mention 2 points about their opposition to our view. One is that if you look at the past 10 years history of the earnings, unfortunately, it has not grown. So, from an outsider, we don't see the evidence of the synergy or the business relationship helping their business growth. If they're going to oppose that there's some synergy, we want to see the evidence. Second point is, if we go to the next slide, about their largest holding, JCU, which is nearly half of their investment securities in terms of value. So here's very interesting. JCU, one of the top copper plating player globally. This JCU, Japan Biochemical, has about 3.2% of the outstanding shares of JCU. On the other hand, JCU owns only 0.6% of JPC. In terms of yen value, JPC owns about 3.7 billion yen worth of JCU shares, and JCU, on the other hand, owns about 100 million yen, 37 versus 1. This is a huge imbalance. So if this difference of 3.6 billion yen means something, we want to see that. We're just saying that. About the second point, dividend policy. We've been asking the company to introduce the dividend equity policy. And actually they have come up with their plan to implement that going forward. But we are asking to implement 5% dividend equity to their total shareholder equity base, which dividend per share will be about 120 yen. The dividend, if you see this slide, has been very stable, about 80 to 90 yen, mostly 80 yen for the past 10 years, while the book value share has constantly grew. So, although the shareholders' equity grew steadily, dividend hasn't grown. We want dividend to be linked to the shareholder equity. That is it. Dividend equity is a policy that links the growth of the value of the company with the dividends. And this case study is about from Sojitsu, a large trading company in Japan. They have implemented dividend on equity of 4% in its 2023 midterm plan. And as you can see on this right side of this slide, after they have implemented this midterm plan, market has appreciated this policy and stock price actually started to perform very well. The third is about disclosure of cost of capital. As many of you see in the headlines or Japanese news media, in January, Tokyo Stock Exchange has released a presentation asking the publicly listed companies in Japan to think about their cost of capital, their balance sheet, and use their balance sheet effectively to raise their corporate value. It is mentioned by them. So, here, to JPC, we are only asking them to disclose their cost of capital because that will be the starting point of them engaging with their shareholders, having a sophisticated discussion about what should be their target return on equity and how this can be matched with their very high return on invested capital. The point here is that because it's a plating and research and development based business without the factory, they don't really need capital and free cash flow is very stable. So return on invested capital over the past 10 years has been ranging between 50 to over 100%. While you see on this slide number 10, return on equity has been sliding down because of the overcapitalization of the balance sheet. And with that, price to book ratio also came down, and now it's around 1 times. We believe this is pathetic. So, although we are very supportive to their business, and we are fine to delegate everything to the management to grow their business, but we want them to think more seriously about their balance sheet. It is as simple as that. The message to all shareholders is also very simple. We are making this proposal to help JPC grow its value. And we want them to wake up to understand how to utilize the savings from the past which is accumulated in their balance sheet. So, the cross-held shares, dividend policy, cost of capital, although it's one by one a proposal, we are mentioning they need to think about the capital side of things to fund their growth properly. We are a supportive shareholder and we love JPC's business. It's a beautiful business and it is underappreciated by the market. We hope all other shareholders to support our view and support our proposal. Please go into our website hibikipathadvisors.com to see the detail of our explanation, which is this slide actually. We believe this should be a very positive catalyst for the management to start waking up, to steer the business to the right direction using the assets they have accumulated over the past many years. We hope all other shareholders to think alike and support our proposals. Thank you very much for listening. This is Yuya Shimizu of Hibiki Path Advisors. We want to help all these companies to maximize their value And Japan Pure Chemical is a very important company in our portfolio. Thank you very much, and see you next time. Bye-bye.